This is the briefing for Friday, May 20th. Quite an interesting day in the stock indices today. We had a perfect setup, as I discussed in last night's briefing, for short trades. And then, of course, we reached a point where we got some consolidation that was below important support. And then, of course, that consolidation broke to the upside. Now, I want to be clear with this so that everybody understands what I was talking about, at least from yesterday's analysis. Yesterday, I talked about this area right through here, about this move to the downside and then this pause or this rotation that we got. Now, you notice that 395 was short-term resistance. That we got pretty close to that in yesterday's trading, not quite to it, but pretty close to it. The opposite was true with the NASDAQ in the Qs. 295, 296 was upside resistance, and it didn't quite reach it there, but the rotation or the consolidation was a little more orderly than it was in the spiders, and you can see that right through that. It had a general uptrend to it, but it was basically an area of rotation. A lot of buying and selling, a lot of battling going on in these 30-minute candles with buying tails and selling tails, as I discussed last night. Now, today it was really important that when this candle happened, it was pretty obvious that we were going to get a breakout of this area of rotation, and that the higher probability was we were going to test the 385 area, which was the next level of support, and that if that were broken, then we really were opening up anywhere to the downside until the market found a stopping point and then recovered from there, or paused from there, because we know that the markets run and pause in all degrees of time. The same thing happened with the Qs, and you can see this candle here was a clear indication for the potential for a short trade. And then, of course, as it reached this 285 to 286 level, certainly had to be aware of what was happening, because we could have gotten a bounce and another rotation back to the upside. That's why watching these areas of balance or these areas of rotation are really important, because it gives you really good areas of trade location. And when you reach an extreme, it doesn't mean that you're going to get a continuation of the rotation, but it does suggest that that is a possibility. And if you don't get the rotation, then typically you get vertical development down to test a longer term time and price support level in terms of the downside. Now, as I discussed last night, that one of the things that's concerning me about everything that's happening in the indices right now is volume. And volume, even on this move to the upside, and I talked about that those last week during this move to the upside, how volume was falling off and that it was unsustainable unless volume began to come in and support the uptrend. It did not. And then, of course, we got this move to the downside. The problem with the move to the downside is the same thing, is that volume was extremely low except for this day. And you can see even through here, yesterday's trading, it was extremely low. And then, of course, today it started out fairly decent. And then, of course, it just dropped off completely until going into the close, where we got a huge spike in volume. And the same thing occurred with the Qs. You can see the low volume through this rally, low volume through the decline, really a rotational pattern right through here. Now, I want to point one other thing out. When we come up with these levels of support and resistance, those are areas. They're not exact points. A lot of times, and there's been times when I've written or I've produced this briefing, and the market will go, or a stock will go exactly to the area that I pointed out and reverse. And I really, typically in the next briefing, I'll point that out and say that that was just luck. So you have to keep in mind that this is an area, and we really came right down into the area of this 385 and then bounced off of it. So while we might be seeing expansion of this area of balance, this balance area to some degree, this was pretty significant that it held. And then, of course, we got this rotation here, and then right here you got the breakout to the upside, trading right through what was support, which was now resistance once it traded through there. And then, of course, we got follow through in the last 30 minutes of trading really going up and testing the 390 level, which is another important level because it was the lower extreme from this area of rotation. Same thing happened in the Qs. Didn't quite make it up to the 290 level, but for the most part, area of pause, breakout, and then of course breaking through resistance, which was at 285 at that point in time. So basically, breadth also declined. We got a little bit of a divergence in breadth, but I'm not so sure it was significant enough to make that much of a difference. But it really was surprising to see the buying that came in at the end of the day today. But using good trade management and good stop management, this was a good trade today to the downside. And then, of course, if you handle it well, if you handle it by using these support and resistance areas, it would have turned into a pretty good trade for you. I did not reverse my trade. I did not go long. I was not convinced that this was really going to happen. So the market gave me a little bit of a surprise in today's trading as well. Now, looking at a little bit longer term, you can see the stair step that's been going on. And one of the things I questioned was whether this was going to be another stair step here. And that's yet to be seen. Of course, the thing that's bothering me now, you see here the low and the spiders on this day and the low today, and look what's happening with volume. This is volume for the spiders. It's not total volume. It's volume for the spiders. And here's that divergence in breadth. More concerning, and I happen to notice this today, is that this blue indicator is new 52-week highs minus 52-week lows. And look at the difference here. Now, you would think that this would be pointing down and not pointing up. And you can see what's happening here with this whole move to the downside. Even going back to here, which was about 6 days ago, you can see that this move here was a pretty negative amount, and then we have a lower low and of course a higher reading in 52-week highs minus 52-week lows. It suggests the market is strengthening, and I find that a little strange. Low volume market strengthening from an internal perspective does suggest that we are potentially headed back up in some type of greater degree time and price move. Now, when I say that, it's important to remember that while we have a run, pause, run, pause, run, pause, that in a larger degree time frame, this is a run. So then the question is, if this is a run, then as of today's close, are we going to see something greater in degree of time and price rotation that could retrace some Fibonacci number from this high down to today's low? The key here is that something else is going on because of the market internals are diverging and diverging pretty dramatically in the market today, and going into today's low. It was very, very surprising to see that the internals didn't absolutely collapse and that we didn't see volume increasing, because it appeared that this could have been a rout in today's trading, but it was not. It stopped or held just below important support. Same thing is occurring in the NASDAQ. This is the Qs. This is volume in the Qs. You can see how low it is. Even in today's trading, it was lower. A little bit of a tick up as we traded down for the last three days. And once again, a divergence in NASDAQ breadth. This is 52-week highs minus 52-week lows. Same thing there. So really not a lot of strength, I want to say, to the downside. Russell, you can see Russell IWM volume just really extremely low. You can see what the volume was going into this low and what it was in today's trading. So really doesn't give us a good indication of what is occurring. Now, I want to look at the longer term time frame. Now, one of the things I try to do is develop a strategy. And that strategy, I typically start from a longer term time frame. Most of the time it's on a daily basis, but every once in a while I'll have to go back up to a weekly basis like I did with this chart, mainly because we had exceeded, let me get back to the daily, we had exceeded what I thought this was going to be the completion of this move. Then we got this move which appeared to be going back to test these highs. And then, of course, the internals on this move were very weak, suggesting it was not going back up to the highs. And then we got, of course, this move back to the downside. So when that happened, I had to go back out to the longer term time frame and try to project. Now, as I've said before, I've got a new book that's coming out fairly soon, as soon as I can finish proofing it, that basically talks about how to trade counter trend rotations. So on a weekly chart, you can see that this is a run, this is a pause or a counter trend rotation, this is a run, and this potentially is a counter trend rotation. And typically one of the characteristics is that it happens in 3 steps. Didn't happen here, but this one is happening in 3 legs, where this leg is approximately equal to this leg. And I talked about this last night, and I've talked about this before, is that I did the calculations, the mathematical calculations, and this projected to come down right into about the 390 area for the spiders. And you can see last week we came and tested that area. This week, after today's trading, we tested the 380 area, and that then suggested that this was not correct, that we were going down. Now, I was going to delete this trend line and forget about that strategic analysis that I'd done, but after bouncing off this, and you can see the buying tail that came in, I'm still going to kind of leave it up there, because I think it is a probability, not a big probability, but it is a probability assessment. So basically, we're at a place of not really sure what to expect on Monday, mainly because of what happened going into the close. Now, strategically, next upside resistance is 395 in the spiders, and support is 385. So those are the key levels to watch on Monday. In the Qs, it's going to be right around the 285 level, and then about the 295, 296 level is in terms of resistance. Looking at short term, I didn't put the trend lines up, but you can also use this area through here, meaning 290 would be key, and then probably, well, it's going to be right around the 295 level. And in the Qs, we're really through this. The spiders, this would suggest that we're going to rotate through this range and potentially test the 395. Based on the current economic situation, based on geopolitical events, and a lot of earnings that are coming in, I would be a little surprised to see an environment where we would have a substantial move to the upside. On the other hand, going back to the daily chart, if this is a run, we could see a counter trend rotation, keeping in mind that 410 is the next higher, lower high, I should say. So it's the next lower high. If that were to be broken, then that would suggest that this is the beginning of something greater to correct this move here, which could even go up to test the 430 level. But we'll just have to wait to see if that's the case. Now, just keep in mind, run, pause. But in a greater degree time frame, this is a run, and if we get a pause, it will basically take out this lower high and potentially test this lower high. I'd be a little surprised if it tested that high, but we'll have to wait to see if that happens. Once again, it's important strategically to develop a strategy that will try to give you an analysis of anything that can happen in the market. And if it does, then you are ready to either go long or short, and you know exactly if you go long or short, you know exactly if that is wrong and is playing out, you know exactly where you want to be out of the market and not let something like that run. Just as in today's trading, when I was short and saw this happen here and then saw this breakout, I was not going to stick around and just covered the shorts at that point in time. Going to be an interesting Monday. Have a great weekend.